With the crypto markets in limbo still, we're looking at some of the positive news and negative stories coming out right now, as we truly have a mixed bag of both pessimism and optimism in the market, depending on what side of the fence that you currently sit. We're seeing the pushing of the green Bitcoin agenda once again, and I think this is a narrative that is continuing to develop at a pace. So we'll take a look at these current trends and topics in this video. If you like the content in today's video, drop me a like. And if you're new here, make sure you subscribe to the channel. So taking a look at the fear and greed index right now, we are up from our low of 10 yesterday all the way up to 22. We're still in the extreme fear portion of this index, but nevertheless, that is a nice jump up, and we're starting to see a lot of investors become a bit more optimistic right now. We're certainly not out of the woods by any stretch of the imagination. Bitcoin just under 38K right now. We're seeing quite a few green numbers generally across the board in the low single digits. Polygon again putting in some good gains, up almost 10%, but most cryptocurrencies across the top 50 are pretty much neutral from where they were yesterday. At this stage, a W-shaped recovery looks most likely, where we start to edge up a little bit before retesting some of those lows at the low 30K level for Bitcoin before we can move higher. But we'll see how this plays out over the coming days and weeks. Now, just checking in with this cool graphic of all of the different changes in price over the last week of some of our top cryptocurrencies here. 70% nuke, 80% bounce, 10% dip. Dead cat or a reversal? That is the question here. And from this list, you can pick out some of the best gainers from this bounce, with Matic up 165% from its lows, Phantom up 110%, Maker up 137%. And with this data, you can obviously make up your own mind whether we're moving towards a more bullish trend once again, or whether this is going to be a dead cat bounce. I'm definitely on the optimistic side of the spectrum here, and I'm looking at this chart more with the frame of mind that when you've got some of these cryptos that are bouncing really hard, maybe it's an opportunity here to rotate some of the profits that you're seeing into some of the slow starters that have not yet kicked up. Of course, this could be a high risk strategy if we push lower again, but this is the kind of thing that I'm thinking about currently. But at this moment of time, I'm not really making any sizable moves in the market. So a source of continued free alpha, Raoul Pal here, something to get your head around. The headline being a major asset class crashed 42% in 14 days, wiping out $1 trillion in value with an orgy of liquidations of people 100x levered with low regulation. Many tokens fell up to 70%, including unregulated lending and borrowing businesses. But beneath this headline, what we've actually got is crypto had a major VAR shock test and nothing really happened. Leverage liquidation was offset by over-collateralization, no one was left holding the baby, no firm went under, the Fed didn't need to step in, and DeFi didn't break, and it pretty much carried on near normal. There's been no daisy chain of collateral losses, no collateral pressure. Stablecoins remained stable. I do have a slight issue with this, as UST was around 60 cents at one point for a while. A few exchanges went down for an hour or two. No exchange big losses occurred. No need to mutualize losses either. No protocol failed. No firms needed rapid funding. No one had open-ended losses. The system didn't break. It offered zero systematic risk to the broader financial world. Speculators lost money, and that is it. So Raoul closes, this is what I first saw in crypto back in 2012. A new anti-fragile financial system that doesn't break in times of stress, where ownership of assets is clear and losses are not mutualized to taxpayers. This was a big 2 weeks for crypto and for the future financial system. And this goes to show that DeFi was able to stand the test when it mattered most. We also had this news release yesterday of Ray Dalio saying that he's bought some Bitcoin within this interview here. It's worth a watch. This, of course, is a personal holding of Ray's. This is not his company. Bridgewater Associates is one of the biggest hedge funds in the world with over $100 billion in assets under management. But this does lead you to believe that potentially they're going to add BTC to the books, because when your head figure and founder is actually invested in that cryptocurrency or that asset class, it's clearly a green light. But he does note within this interview that the biggest risk for Bitcoin is actually its success. Because if big institutions or big players in the markets start to sell their bonds, for example, to buy up Bitcoin, then this would be a huge loss of control for governments. And that potentially is an existential risk. But for sure, having a huge hedge fund manager like this, someone massively respected in financial circles and one of the best investors of the generation, backing Bitcoin with his own money can only be bullish for the asset class. Then we've also got Kevin O'Leary on Anthony Pompliano's podcast. This was a really good watch. It's only around 50 odd minutes. I would definitely go and check this out, but he's condensed the major bit in here, which is all about Kevin's DeFi play, into a smaller clip of around 8.5 minutes. Basically, within this segment, Kevin talks about the need for yield and for productive assets. He's famously one of the main investors on Shark Tank, a huge show in the USA, being copied with Dragon's Den in the UK. But Shark Tank is a really big deal, and this guy is very famous in the US. He talks about his allocation towards crypto. He's got between 3 and 5% in Bitcoin, but sees himself pushing that threshold up to 10% allocation very soon, and talks about actually selling off gold in favor of Bitcoin. So this is a really big move and something that other investors are likely to copy when you get someone of influence doing things like this. He talks about gold having a cost of storage, whereas Bitcoin can be stored easily, cheaply, and be put to work through Ethereum-based DeFi. He's also now a major shareholder in a company called DeFi Ventures in Canada, which they are going to rebrand to WonderFi. I'm sure we're going to see a lot more of this in the not too distant future. But interestingly enough, he talks about the current volatility that we've just seen, the huge drawdown, but he seemed very unfazed by this and actually talks about volatility being a good thing for yield. And if you don't get a chance to watch this, which I would recommend you do, he talks about we're still early. Only 1% of institutions actually have crypto on their minds right now. And so if he's bringing out DeFi products and essentially yield farming in the industry, more big money will follow. So we're definitely early. We're still on the right ship, and we are still on the moon mission. There's also reports in CoinDesk today about Kevin O'Leary doubling down on the green Bitcoin narrative. This is a narrative that's really taking off right now, and I think that this is more of a geopolitical narrative that is becoming more and more widespread. So this is just taking a hold of Bitcoin with the proof of work, coal energy kind of negative narrative, but there's a lot more going on in the world right now. You're seeing widespread efforts to become carbon neutral. He notes that less than 1% of institutions globally actually carry crypto as an asset class, and for that to change, miners need to prove their coins are created sustainability. So sustainability, low carbon footprint, this kind of thing is just all over the world stage right now, and most of these institutions have both ethics and sustainability committees that filter offerings before they're allocated on the investment committee. They're not just singling out crypto. So it seems that crypto has to get in line with exactly what the institutions want and what they want to be seen to be backing before they come in and really pile in with the big bucks. So continuing in that vein, the crypto Jesus Michael Saylor here, confirming that yesterday he was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form the Bitcoin Mining Council to promote energy usage, transparency, and accelerate sustainability initiatives worldwide. Bitcoin then promptly pumped around $2,000 off the back of this news, and the Elon tweet here spoke with the North American Bitcoin miners. They're committed to publish current and planned renewable usage and to ask miners worldwide to do so, potentially promising. So again, Michael Saylor putting maybe his pride to the side after Elon was trolling him for a bit. However, I do think that Michael Saylor seems to have a very good sense of humor and probably just took it in his stride. But he's stepping up to the plate once more and pushing BTC further and further forward. And this is certainly a step in the right direction with that sustainability, eco-friendly kind of narrative just being pushed everywhere. Even in your local area, you're probably seeing reduced speed limits, the push for more public transport, that kind of thing. Everything's being pushed carbon neutral. So if maybe Tesla and Elon Musk come up with a solution to make green mining for Bitcoin, then this is only going to enhance the future price appreciation for the asset. Then we've also been hit with Goldman Sachs, crypto a new asset class. This is kind of the statement, the headline that you would have seen, but it's posed with a question mark, not really a statement like it's kind of been portrayed elsewhere. However, within this, which is their investor report, it's quite a good read, to be fair. I went through this morning, and some of the highlights here, they spoke with a range of individuals. Mike Novogratz with some awesome content here, where he pretty much singles out Ethereum as the go-to investment right now. So within here, the three biggest moves in the crypto ecosystem, payments, DeFi, and NFTs, and are mostly being built on Ethereum. So it's going to get priced like a network. The more people that use it, the more stuff that gets built on it, and the higher the price will ultimately go. And some of the juicy questions in here, one was this: so what are the remaining roadblocks to further institutional adoption? And Mike responds, institutions need a little more regulatory clarity, which they'll get soon. Former SEC chair Jay Clayton didn't want crypto to be his legacy, and so he punted. But Gary Gensler is very knowledgeable about and interested in the crypto space. Within his first 9 months, a clear regulatory framework will likely emerge that will make it easier for institutions to get involved. Gary Gensler famously took an MIT class on cryptocurrencies that you can watch for free on YouTube. I've personally watched it. It's a very good watch. And clearly, when the chair of the SEC is this guy who's taught a class on it, we're definitely headed in the right direction. And within this Goldman Sachs research report, it's quite amusing that they print this. So Bitcoin and Ether have performed strongly year to date, and they've got some of these other markets in comparison which just look ridiculous. Ether year to date up over 250%, Bitcoin up around 40%, but the majority of traditional markets here either just showing very little signs of growth or even negative. But in return for the performance here, you do get the volatility as denoted here, but I'm sure most people when they see this will happily take the volatility for these kind of gains. And I think that we're starting to see a narrative push for Ethereum, a network soon to be a store of value, more energy efficient with the move to proof of stake. I think there's a lot of money about to enter the market in Ethereum. And here we have further proof that the whales and long-term holders have been taking coins from the hands of the weak-handed investors, the spaghetti finger newbies. So the number of Bitcoin addresses in accumulation has risen to a record high. The count of accumulation addresses climbed to a record for the 7th consecutive day on Monday, taking the total to 545,000 addresses according to Glassnode, and Glassnode defines accumulation addresses as ones that have at least 2 incoming non-dust transactions and have never spent the funds. Essentially, these are long-term holders who are not selling. Over-the-counter desks have also seen substantial outflows over the past 2 weeks, signifying dip demand from institutional investors. And from the chart here, you can see both the number of accumulation addresses here going to all-time highs and the balances within these wallets also pushing up towards new all-time highs. So this pretty much shows you the story, the movement from weak hands to the long-term patient strong hands. Then finishing with some local news here in the UK, Bank of England's Bailey calls cryptocurrencies dangerous. Dangerous being an adjective to call something harmful or with potential to cause injury, so a strange adjective to use. Bank of England Governor Andrew Bailey says on Monday that cryptocurrencies and similar assets were a danger to the public, reiterating his long-standing concern about them. And this is from Reuters. They've been rolling out a load of FUD against Bitcoin and crypto in general. I'm skeptical about crypto assets, frankly, because they're dangerous and there's a huge enthusiasm out there. So unfortunately, it would be nice to see the UK trying to really set itself up center stage as a crypto hub. It's already known that London is a major financial hub, but with this kind of attitude, I'm not seeing that kind of enthusiasm for crypto that could really make Great Britain great again. So on a personal level, I would love to see us swap this guy out and get Gary Gensler in. Let's get someone with a bit of know-how in the crypto space to push our economy forward. It's rather frustrating to watch blockchain technology start to really blossom, and then the country in which you live seem to be so negative towards it. But I'm sure my American viewers feel exactly the same. So there we have it, a real mixed bag of news and stories right now. The market certainly hasn't made its mind up quite yet, but I am optimistic that we are definitely pushing forward. Maybe we're going to have some sideways action for a month or two, but I think we're setting ourselves up for a big, at least end of year, and a much longer cycle than many predicted. As you're seeing a lot of YouTube channels predicting like an end in September or October time, I really can't see that happening. If you like the content in today's video, make sure you subscribe and check out my Patreon, link down below for additional content. Thank you for watching. Goodbye.